All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. So markets overall all over the map this week, but ultimately able to scratch out a gain really Thursday and into Friday. Big story was Bostic, Fed member Bostic, non-voting member, made some comments on Thursday, and basically the highlight of it was he essentially indicated that the Fed could pause by summertime, and markets really just took off and ran with that. If we take a look at the intraday here, you can see the market was actually down pretty substantially Thursday morning. And we're kind of just trading sideways a little bit. We recovered some of the losses. Then as soon as he made those comments, we took off to the upside. Friday, we pretty much did not look back. There was a kind of a gamma squeeze, a little short squeeze as well, going on into Friday, into the weekend. And, the markets held up into the end of the week. How much of this is really him saying that, and how much of it is the market doing what it wants to do anyway? Probably more of the latter, because Fed President Waller, who is a voting member, Friday morning said, he basically came out and said the higher for longer type rhetoric, and the market completely ignored it. So you're seeing kind of, and this is just how the market works sometimes. It has, it works on its own time. But bottom line is, one of the things they pointed out, I believe it was Wednesday or Thursday, is that, you had the 2-year Treasury here coming into a double bottom. So there's your pivot from November, and we pierced through that Thursday morning. We got a bit off the lows. Bottom line, the market was probably due for a bounce anyway. So that's, sometimes it's just how it works out. When the market gets close to support, sometimes it listens to the bullish news more so than the bearish news. And that's really, if you ask me, that's kind of the bottom line. So we can kind of see we were coming down here. We grinded down into that, that 200-day moving average. We bounced on it a few times. We couldn't break through it. So path of least resistance takes you back up for a bounce. Now, we did do some technical damage, as we talked about last week. Again, breaking the 50-day moving average, nothing crazy though. But on the weekly, losing that green bar, that was your breakout bar, and we closed below that. So generally, any bounce here, in my opinion, is going to be taken with a lower high. It's still a pretty good rally here. We can't take anything away from it. We have to respect it here. But right now, the market's looking at that 2-year, and if you ask me, they wanted to. Let's look at the yield here, actually. Basically, if we can get this up, there we go. Basically, we got very close to 5% on Tuesday, and you can see the high was 4.944. I think this was basically just a walking back of that. So the Fed right now is unloading, or at least they're saying they're unloading their balance sheet. But right now they're unloading, and they've actually admitted now that they had a short volatility position, and they are unloading that. What my takeaway is right now is that they do want the markets lower, but they don't want a crash, right? They want an orderly decline. And so it's inevitable. This is going to get through 5%, which I think personally that's the magic number for the market to really start respecting the Treasury market right now. Because right now, the stock market's acting like the Fed's going to full pivot. It's still acting like it's going to full pivot here. We're still, 348 was the low here in October. We're at 404 right now. And if you look at the 2-year, it's at the lows. So the market's acting right now as if the Fed's fully pivoting. The stock market is anyway. The bond market is certainly not acting that way. But for right now, I think, we got close to that 5% level. I think personally, that's the magic number for the market to start actually freaking out here. And I think they know that, and they just kind of wanted to back it off a little bit here. But if you take a look at the yields, here's the 10-year. This is now trending up again. So we backed off a little bit here. We got overbought, way overbought. And you see the moving averages here starting to tighten up, and now they're starting to expand again. So you take a look at the spacing here, starting to increase in these moving averages. That's the 10-year there. There's the 30-year. Again, if you remember back a few months ago, I said on this retrace, I said if you want to take a short bond play or a short yield play, so long bonds, it would be right around 40, 45. We never quite got there. And sometimes, the numbers take some time to work out, but we got there on Thursday, 40, 47 there on the TYX. And it did come back in. Now, again, we got so close to it here, and we've done some consolidation. I expect a higher low at this point. You see the 10-year actually got back through 4% there before coming back in on Friday. But and here's another thing, too. This is another dynamic. And you're starting to see some investors ask this, but I can park my money in an account and get 4% rather than deal with, these types of volatile swings here on the NASDAQ. And that's starting to look attractive to investors too. So again, bottom line, the Fed does want the market lower. They want to walk it down. They don't want to crash, but that's starting, and that bond trade is starting to look attractive to some investors as well, with the yields being where they are. Anyways, let's get over to it. So as far as upside moves here, again, I think you could possibly get up. So basically here on the spiders for next week, right into the kind of this red bar low, that was sort of your breakdown area. So right around the 406 area, and there's a 20-day moving average. We'll see how it responds there. It is a little short-term overbought here on some of the intraday timeframes. I think over 410, that's your really big level of resistance there on the spider. So we'll watch for that if we can get up there. I'm not so sure. Jerome Powell is speaking on Tuesday. The market, I guess the market's basically pricing in a dovish Powell. If he comes out and he's not dovish, we could see a hard rejection here. So there is, and then we do have economic data later in the week. I believe we have JOLTS and I think non-farm payrolls. If I'm not mistaken. So we do have a loaded up week here with lots of data coming out. Anyways, as far as the Qs. So again, they got a nice bounce as well. Let's put our trend lines back on there. And we finally pushed back above this trend line here. Again, we had a fake breakout last time. We came back down into the lower range, and we pushed up here right into that 20-day moving average. There is a gap here at 303, but right around 305 is kind of like the big level there for the triple Qs. But again, nice move there off the lows, and again, we'll respect it for now. The Russell 2000 here also getting a nice pop here. Again, I do think this one has topped out on this leg. So again, could it get up here and fill this gap, maybe up to 195? It's possible, but I do think we get lower highs here in the Russell. As far as the diamond, again, a nice bid here. You do have a trend line that broke pretty convincingly, and you're now into this kind of necktie of the 20 and 50 moving average and this trend line up here. So good amount of resistance there on the diamond, and then there's a gap fill if you can get above that, right around 338, and then 340 is going to be also a very big level there for the DIA. Over to the semis. So nice move here, a Thursday, Friday on the semis. Still, showing a little bit of relative weakness here outside of NVIDIA. NVIDIA is holding up really well. I can't rule out another pop in this. If the market does push up, 260 will be major level there for NVIDIA. But NVIDIA really carrying the SMH right now. Again, 248 to 250 is going to be good resistance there on the daily time frame, the SMH, but it is holding up. We'll respect it. Same thing with cloud software. CRM really coming in with the save this week with their earnings. So they did beat and into a lot of resistance up here at this area here, but IGV getting a lift. We still did some weekly chart technical damage though last week, so don't forget about that. We closed back below that pivot on a weekly basis. So little minor damage there. If we closed below this green bar here, that would be pretty much a death sentence if you ask me, but for now it's holding up. So again, we'll respect it there. Transport's also getting a nice bid this week. They got above this red bar high at 15,000. I'm still saying right up in this area around 15.3 and then 15.5 are going to be levels to watch going into next week. But again, transport's getting a bid here, so again, we'll respect that as well. We already talked about rates a little bit here again, but we'll just kind of cover it. The ZT here, the 2-year, this should, get some sort of bounce here off double bottom. But again, this is a strong downtrend, and I do expect lower prices in bonds here. So just be aware of that. Again, ZN getting a nice bid here, the 10-year futures, as well as the ZB. So we could come up and, I think it wants to curl back up again. We talked about this kind of M pattern, and a lot of the time when you get that M double top, you get an A. So kind of a, one of these. And then you get that rollover. So we're watching for that there on the 30-year. But again, bonds in kind of a weak position here. And I think that's going to be the driver here for most of the year as far as what the market's looking at. Anyways, into housing XHB. Again, getting a nice bid here. This, I believe, has topped out. There's lots of resistance at $70. Same thing there on the ITB. $70 is that level. VNQ. Again, technical damage earlier this week. We broke below this trend line. We did hold this level. It's getting a bounce. The big level here is right around 88.60 on the daily time frame, but this is not a good look here. Again, you're seeing a weekly big bear base there being built for the VNQ. All right, let's take a look at XLF. So financials, again, nice outside week here, or excuse me, outside day on Thursday. They did save it, and we bounced back up on Friday with everything else. Credit Suisse hit a new all-time low this week. Blackstone had some defaults, but it looks like I don't know, they got bailed out backdoor or something like that. It looks like Credit Suisse got it too. Was down, I think, 10% on Thursday, and then just magically up, 7% on Friday. So it wouldn't surprise me if we hear something about another currency swap very shortly on these guys. But again, new all-time low. XLF, though the general financials here, again, still below this red bar, and this is still a lagging sector. Yield curve's been inverted for a long time now. I mean, we're going back to, I think, June for the 2s and 10s, and November for 3-month 10-year. And they're very, very deeply inverted. That's going to hurt these banks moving forward. But for now, again, they're hanging in there. But this is not a pattern of strength. We had a nice rising wedge breakdown, and really just kind of consolidating sideways here on the daily time frame. Broker dealers via the XBD. Again, kind of a fake out last week and a little pullback here. It's held that 490 area, so we'll respect it for now. Ultimately, I think it heads back down to this lower trend line and then lower after that. All right, over to energy. So crude. Interesting chart here. So it was kind of all over the map all week long. We had a nice dump on Friday morning, and then huge V-shape there for crude. Again, I'm not sure what to do with this here. If this starts to push up, like if this gets momentum, this could be an impulsive move to the upside. So I'm not saying that happens, but again, you got to watch that 82, 72 area here on the weekly. So if we get a weekly close above that, crude goes way higher, like way higher. I'm not sure it's ready to do that yet. There's been a lot of chop shop. We've had a lot of big moves in either direction. But if this follows through on Monday, this could really start to push out. If they reverse it, then it's all back on the table for a move lower, and you still have a bear base here building up. But if that breaks to the upside, it's going to go a lot higher there. So just be on guard for that next week. XLE. Also having a nice outside move here on Friday. Again, still just kind of stuck in this range for now, so nothing really too new to add to it. XOP, that got above that yellow trend line again on a weekly close, but again, no follow through yet. We've had that, we've had these closes above this trend line without follow through here, and again, you still have a big red weekly inside bar pattern there, so just be careful with XOP there. OIH, this looks good here. This can still get up to 350. There's that weekly time frame, and they did, remember last week they did save that green bar low. Nice test candle. This looks good for a move to 350, honestly. If this consolidates here, that probably will get up there, I would say, in the next couple of weeks. All right, over to Natty. Again, power move here on Friday, up 9%. And yeah, really nice reversal here off the lows. This will come into some resistance around 315, 320. You have this pivot low at 310, so 309, and then there's kind of a little bit of chop right there, the 50 MA. This might pierce through it a little bit. There's a lot of momentum. Remember, the rubber band is epically stretched at this point, so you have to expect a big reaction here. Ultimately, this will go to $4 in the next, I would say maybe a couple of weeks to month, but it's not going to get there in a straight line. And even now, it's still, well, going back to last week, or $1.95, you're basically $3 extended from your 20-week moving average. You're still, $4.50 to $3. That's still $1.50 extended from, $1.50 extended here from the 20-week moving average. So it's still got room to go here. And again, looking at that fib. I know it seems a lot, but it's just a 25% retrace to $4, and there's your 2 200-week moving average. So that would be an area to watch for a back test. But yeah, it's not going to get there in a straight line, but natty, really powerful move there off the lows. I think we definitely saw a capitulation over the last couple of weeks. Over to shift gears here and get to, let's go to ag first. Take a look at Mosaic. They reported earnings. They announced a buyback too, and nice move here. So let's take a look at the weekly. That's holding up pretty well. If we look at, we could even take like kind of a trend line here from the high, and you can see, that did push through that, and then you got some continuation. So now you're back above all these moving averages here on the weekly. You're above this pivot here. You'll run into resistance, right in this area. You've got a big red bar there around $60. So there's lots of selling, up there, but we did close the week above that pivot. So that's a sign of strength. So nice move there from Mosaic. A little short-term overbought, but nice move there. And obviously Intrepid getting a little bit of a sympathy bid, although this is a much weaker name here. NTR got a sympathy bid, still below that 200 moving average, but nice move for Mosaic. And DBC here, just hammering a little bit on that up, basically got a slight close above that upper trend line. We'll watch that one going into next week. If you push through this, then you can kind of negate this sort of descending triangle that we talked about in last week's video. But if it trades back down, then maybe it wants to hammer on this lower end. And if it hammers on it too many times, this is going to push lower. But for right now, nice little pop there for DBC. Onto uranium, CCJ holding up well. You got above that 28-day moving average again. Still has resistance at 28.67, so right up here. A daily chart close above that. We'll probably take this thing to new local highs, but for right now, we'll just give it. It's below that red bar, so we'll just respect that for the time being. But it did have a nice reversal bid. URNM looks a little bit weaker, much more of a bear pattern here on the daily. So just be aware of that. Let's get rid of this line here. And we talked about this last week. It did have a nice, does have a nice wedge pattern, so it's tightening here, so it's going to go one way or the other. But on the daily, this is much weaker here than CCJ. Anyways, all right, let's get over to the DXY dollar index. Again, just pushing up here. So we had the move, flag up, and now it's just flagging again below this pivot. I think if this consolidates a little bit more, this wants to push up to that 200 moving average, possibly even a little bit through that, maybe to 107. But there's a lot, you have a pivot here, a pivot there. So it's got to consolidate a little bit to get through that. But once it does, that's where it's going to want to go into that 107 handle. So DXY holding up and basically just flagging here. Gold getting a little bit of a bounce here, much needed bounce. You will have a little resistance around 1880. I'm not sure what it wants to do right now. I have to see kind of like where it stalls out next, but there will be resistance at 1880 there, maybe 1900 on a overshoot there, but that's kind of the daily chart level there. For gold, silver here holding up well, or at least getting a bid off of that low. So we went right into that pivot low. It's not surprising it's getting defended here, but still below that red bar from the 24th. And again, comparing that to gold, so there's February 24th. If we compare that to gold's holding up much better. So there's that red bar there. So silver under a little bit more pressure here, but again, getting a bid. This should get up to 22 at the very least, and then I'm not sure what it wants to do after that. But I do think we have one more push down, and then I think it is time to get in. Platinum holding up much better, bucking the trend here. A little kind of micro W pattern. This should get up to 1,000, and then I think it's going to come back in again as well. But this is holding up really well here. There will be a good buy on this probably at some point in the near future. Copper here is trying to hold up. We do have some lower highs starting to show up on the daily chart. I think this still wants to go to 375. But again, we'll just, it's been kind of choppy here, but you do have those lower highs and lower lows. I think this has to go back and retest 375. Anyways, over to Bitcoin. So Bitcoin, a little bit of a kind of breakdown here over it was actually on Friday. But again, we had this bull pattern here, big move up, and then another micro kind of bullish inside bar that failed. So we closed below that. And then from this breakdown bar, we put in an inside bar bear flag. So interesting. So a bull pattern and then a bear pattern inside of that. that got hit really hard Friday. Silvergate, which I forgot to mention with the financials, that took a huge hit this week. So that was kind of news related there. Maybe kind of holding Bitcoin down. And now we're starting to consolidate here below this kind of lower trend line. So if this goes sideways, it's setting up, and it's starting to do that now, but it's, it's the weekend, so we'll have to see what happens when Monday comes in and there's volume. But if this consolidates sideways more, it's going to set up to break this bar, and then it's going to go much lower. So just be aware of that on Bitcoin, showing a little bit of a weakness. If it can reverse that, well, then maybe you can get back up to this upper trend line. But for right now, definitely a weaker showing here after that move down on Friday. And again, it did not participate in that power rally in the spiders. Anyways, yeah, so bottom line right here, market's bouncing because the 2-year went into double bottom, and I think that's really what you got to keep it at right now. As far as levels here, again, we're right into a level here, right around 406 on the spiders. 410 is going to be major. Be watching for Jerome Powell on Tuesday, and then we have lots of data coming out later in the week. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.